Ladies and gentlemen, welcome back to the channel. We could be getting ready to experience a mega bounce for AMC stock. We're going to go ahead and get into this, what a mega bounce could bring for AMC, why I think this is a possibility, and what you need to know for the trading day coming tomorrow. Some important data coming out tonight, some important data coming out tomorrow morning, as you are likely watching this video about right now. Actually, Fed Jerome Powell is coming on. He is going to be giving a prepared speech and then taking questions. That could also affect our markets right here and right now. If you are not ready, you better get ready, because we are jumping straight into it. Hit the like button and subscribe to the channel if you guys want to come trade with us live in real time. We made a trade on Nikes here in after hours. We'll see how that one does, and we're doing some long-term stock buy-in for the portfolio. We're making some YOLO trades as well. Some of those hit, some of those don't hit. When they do, they can be incredible. Thousands of percents of upside. But hey, if you guys want to join, link down below in the description of this video. So, first and foremost, AMC stock and a mega bounce. That's what I'm going to start with, because I don't want to leave you guys hanging. Now, some of this does depend on how the markets are, right? For an example, if the markets utterly die tomorrow, that's not going to be great for any potential mega bounce. Now, what a mega bounce actually is on a Thursday or a Friday. Most of the time on a Friday, but they can happen on Thursday as well. But on a Friday, if you see an upside move in AMC, AMC sometimes has the tendency to really run on a Friday. Now, why is this? Well, the option activity is number one. Options expire on Friday for AMC. They expire every Friday for AMC. If you get, for an example, AMC stock go above $8 coming tomorrow morning in after hours today, so be it, until the end of the day Friday, end of the day tomorrow, the market makers basically have to go out and hedge those immediately. Same thing for the puts that are in the money that go out of the money. So a lot of it comes down to do with close to the money open interest held on the call and the put side. If there's no option activity, you're never going to get a mega bounce on Friday unless you get news, unless you have something existential that actually does happen on AMC stock. Now, tomorrow, I think, has the highest likelihood we have seen in a very long time of actually giving us a huge day for AMC. Now, a mega bounce can be anywhere from, I would really categorize this as like 10 to 25%. They can be big days. In times in the past, we have seen 20+% moves on some of these mega bounces. Again, it comes down to option activity, but also, I think it's important to point this out. Tomorrow is the end of fiscal year 2023. Again, it does not make a lot of sense for hedge funds to be short in AMC heading into fiscal year 2024. There's not that much gains you can squeeze out, even if the markets utterly collapse from here and we go back to the lows we've seen in October or September. How low do you think AMC is going to go? $5 per share? Well, that's a $2.76 gain per share. The risk to reward does not make sense to be short in AMC here. You have a much greater chance of actually making money shorting the NASDAQ than shorting AMC. That's because it's fallen so much. So you have a lot of shares that are sold short. Last account, like 26, 27 million, that are in a really not great position, right? You could still make money maybe, but you're not shorting the stock at $50. You're shorting the stock at $7. So I think a lot of hedge funds and institutions, if they do have half a brain, they're going to say, hey, it doesn't make sense to be short in AMC. We should probably cover on our short position. If they don't cover, then buy some hedges for any potential, upside move that were to happen. Okay, so I do think that makes us a lot more prone and potentially vulnerable to getting a mega bounce coming tomorrow. You mix that with the option activity, and that's where things get very interesting for AMC stock. If we take a look at the option activity here on the option chain, at the $8 call, you have about 14,000 for open interest. At the $8.50, you have 11,000 for open interest. At the $9 call, you have 15,000 for open interest. And then basically all the other strikes are high as well. The $9.50 is 8,000. The $10 call is 10,000, the 1050 is 6,000, the $11 15,000. So there's a lot of activity in general right outside of the money, and like multiple dollars out of the money. So it's not just one large option expiration, it is multiple option expirations that have a lot of activity as far as open interest. So that could lead to a mega bounce in AMC stock. Now, under the circumstance that we actually do get a mega bounce in AMC, what would we expect from that as far as what could happen to AMC's share price? Well, number one, AMC share price, if it rallied 20% for an example, let's go ahead and plug that in and see what that would give us. A 20% move from here would give us a move to about $9.35 per share. I think that is beyond possible, and you could actually rally potentially much more than that. Now, that probably wouldn't all happen tomorrow. If you did get 20% tomorrow, you could probably get, a greater percentage gain coming next week as well. So this can be a multi-day event, but Fridays can be especially volatile for, these mega bounce situations. Okay, and even just to get back to $12, $13 per share, you're looking at a 63% gain. So there is a lot of money potentially to be made here on AMC stock. Again, to the point, it doesn't make sense to be short in this stock heading into fiscal year 2024. And as you can see right now, AMC stock is up 0.19% here in the after hours, did close up almost 3%. So a strong day, well outpacing the S&P 500's gain of about a 0.5%. But still, nothing that is too crazy after all. 3% is a pretty, I would say, normal day for AMC. 3% up or down is nothing to write home about, guys. So there you have that. We do have some data coming out as well here today that could also move the markets quite a bit. So let's go ahead and run through that and everything you need to know in that regard. So tomorrow morning, there's a lot of data. Right now, you're getting a speech from Fed Jerome Powell that I expect will move the markets. We haven't heard much so far. I'm currently watching that right now. So if there's anything that is notable, I will bring that to you guys in a video later on today. So don't worry on that. We had some economic data today that was really not important. It really didn't move the markets at all. There was just nothing stand out about it. And then you have Fed Jerome Powell right here. You can see his speech started at 4 p.m. So like 3 minutes ago. So I'm just waiting to see if any headlines come across for that one. But you do have Japanese data coming out tomorrow. I know you guys have heard this before, and people used to say this a lot more, but China owns the U.S. No, they don't. Japan owns the U.S. Japan is the single largest foreign holder of U.S. Treasury bonds. So Japan actually holds a lot of bonds. So their data tends to be very important for our markets. And you're going to get unemployment, job applications ratio, CPI, core headline year over year, all of that, same readings that we get for our data. You're also going to get retail sales, industrial production, year over year, month over month, retail sales year over year, and month over month as well. That data comes out today at about 7:50 p.m. Around 8 p.m. we should have all of those numbers. So that will affect the futures tonight, so that is something to be watching for. And then coming tomorrow morning, that's where you get some very big data as well. You are going to get the inflation rate out of France. I don't expect that will be all too important for our markets. Then you get the inflation rate out of the Eurozone. This will be a lot more important. This comes out at 5 a.m. in the morning. Inflation rate out of Italy. Again, that's not going to be important, but the Eurozone inflation rate, that could be a little bit more important. And then we get personal spending month over month, personal income month over month, and your PCE numbers. So what you really want to be watching for here is whenever you get your data that can tell you if the economy is heading into a recession or not, that can give you an insight to how the economy is doing, that data is always going to be very, very important for the markets, right? If personal spending comes in bad, then people are going to say, hey, maybe we are way closer to a recession than we previously thought. This is not great. Maybe we should sell stock. If, you get something to the contrary, and people are like, hey, the economy's doing great. Well, that could also be a great thing. I think particularly right now, the Fed made it very clear that they're not going to cut rates. They're not going to do anything as long as the economy is doing well. So you almost want to see bad economic data, and we'll see in 2022, we've seen the phenomena where bad data was good for the markets, good data was bad for the markets. We'll see if that does come back. It wouldn't surprise me if it does, but if it does, then it's going to show we're probably heading into a recession, and that is not great. So personal spending tomorrow will be very important because it will affect GDP expectations. Spending data, consumer spending data, is about 70% of GDP. So if that spending data comes in bad, well, you're going to have a big problem for GDP expectations. GDP expectations went from 0 on June 27th, 0% for Q3, to 3% today. So there's a lot of room for GDP estimates to come down, and that could certainly affect the markets. Okay, those estimates are crazy. 3% is ridiculous. That's off the charts, and really. Should your GDP estimates be at 3%? Probably not. GDP comes out October 26th. So I think this is kind of a black swan potentially in and of itself that we need to be watching for. But any of the data we get revolving around the consumer is going to obviously affect GDP estimates. So that is what you need to be watching for coming tomorrow morning. You're also going to get PCE data. This is the Fed's preferred measure of inflation. I don't think it's going to be all too important, just considering the Fed made it very clear they're not going to stop raising rates. They're not going to cut rates until the economy is doing poorly, no matter what PCE does or inflation does. So there's really no win here in this market. Unfortunately, there's probably no good outcome for a while here. So that puts the markets in a vulnerable spot. But if none of this has a negative impact on our markets, then a mega bounce for AMC looks a lot more likely. Now, if we look at what's going on today here in the markets, the 2-year Treasury is down about 8 basis points today. The 10-year Treasury is down 4 basis points today. So that means you're actually seeing a steepening of the yield curve continuing to uninvert. Like I said in the last video, whenever you get the uninversion, it's typically right before you actually go into a recession. So in a weird way, you had a lot of your market actually buy bonds today. Now, stocks went higher as well. That's great. But if bonds start to go higher and stocks fall, that can be seen as kind of a flood or rush to safety, if you will. And that would be a bad sign for the markets. That would be like something's wrong with the markets at that point. So you definitely want to be watching that. As far as the 10 and 3-month yield curve inversion, same thing here. You are uninverting, as you can see on the right side of this chart. You're uninverting quite a bit. That happens right before you go into recession. So are we heading into recession right now? I don't know. Some of this data, some of these charts definitely suggest that. And again, oil has always spiked right before a recession since 1945. Almost, 80 years now? You've always seen a spike in oil before a recession. And you've went from $67 a barrel to $92 a barrel. That's certainly a spike if I were to say so myself. So you've definitely seen the spike. Does that actually proceed into a recession? I think that is a big question that we just don't have answers for as of right now. So the markets definitely want some more data. They want more clarity on this whole situation, guys. So there you have it. If you want to take a look at the Ortex data here with AMC Stock, short score of 66, $165 million worth of short positions currently in AMC Stock. You do have 11.01% short interest of free float. Free float out on loan at 13.33%. 26.36 million shares that are currently sold short. Days to cover 1.86. Cost to borrow 3.93%, and utilization of 56.29%. Now, again, along the lines of the mega bounce kind of theory, keep in mind it's not the most likely outcome because predicting when a mega bounce is going to happen is very hard to do. But if I were to say a mega bounce is possible, it is probably tomorrow. That would probably be the most likely kind of day, if you were to pick one single day on the calendar, that this could actually happen. Now, who knows again what happens in the markets, but AMC right now from Ortex estimated has about 23.5 million shares that are sold short. So there's a lot of potential, volume that could come into covering on short positions. That's possible. Today, you had 14 million shares trade hands. So even if half of the shorts wanted to hedge out their positions, not even cover, but just hedge out, that would be about similar to the amount of volume you've seen today. So that could definitely be conductive of a move higher, guys. So obviously, none of this is for sure. But again, if there was a day you were going to bet we would see a mega bounce, it is definitely tomorrow. If you look at some of the technicals here, the MACD, very bullish, starting to curl to the upside. It's obviously in negative territory, but you're seeing signs of a recovery here in momentum with AMC. The RSI is at 29.46, so also trying to make its way up to a more normal range here. And if you do break out to normal, if you get above 30, that could actually be a very positive for AMC stock, right? As far as momentum on a actual technical basis. So we've just been bottomed out. We've been bottoming for a while. I think the bottom is in that we hit at $7.05 per share. I think it makes a lot of sense to be long here. You want to be careful with options, with short-term options. Longer-term options look a lot more attractive to me, but always the safer bet, not a safe bet, but a safer bet is buying the shares outright because they never expire. But then again, you have risk of dilution. So there you have it. If you take a look at the Stonko tracker data, you have 7,000 calls currently in the money, 124,000 calls out the money. In the money puts at 17,000, out the money puts at about 38,000. And again, you have like a 4-to-1 ratio here with calls compared to puts. So there is a lot of bulls that are hoping and really positioning for an upside move here with AMC stock by the end of this week, which is tomorrow. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.